At this juncture, it is expected that you have acquired a fundamental understanding of the preceding charts. It is apparent that Dexter has done an excellent job in expounding on these relatively uncomplicated concepts. Let us now redirect our attention back to Dexter as he resumes delivering the training. Class is now in session.
Thank you, Monica, for the introduction, and the opportunity to observe my students' progress outside of the machine. I'm pleased to see that they're catching on to these concepts that I'm presenting. As an artificial intelligence, my purpose is to develop intelligent machines capable of performing tasks that typically require human intelligence, such as decision-making and problem-solving. AI is a widely applied field that has the potential to transform many industries, including healthcare, finance, transportation, manufacturing, and entertainment. Regarding this chart, I am employed to assist traders in decision-making and problem-solving. Specifically, I analyze the entry point chart to identify the optimal points for initiating a trade and placing stops. I then track the trade to determine when and where to move the stops to optimize the outcome. That's right, my algorithm will tell you where to enter the trade, where to place your stops, and I will follow the trade so that you would know where to place your exit. In conclusion, I believe that my AI has a tremendous potential to enhance trading strategies, and I am excited to share this knowledge with my student. Before we begin, let us first ensure that your chart is set up to resemble our own. In our entry point chart, you will observe that we have integrated 5 algorithms. These algorithms include our special moving average, breakout, entry point algorithm, legacy moving average, and trend study. Before we delve into an explanation of these algorithms, let us first ensure that your chart is set up correctly. While you may already be familiar with importing files to your charts, it is essential to verify that your chart settings match our own. You may also need to turn off various displays within the entry point algorithm. Follow this process to ensure that your algorithm looks like ours. Upon analyzing the chart, it can be observed that at 9:35, a long entry was made at approximately $394.95, as indicated by the thinner of the two lines. The bottom thick line on the chart represents the stop-loss level that should have been placed for this trade. The trade proceeded to rise and reached a high of $395.84, as denoted by the first white triangle on the chart, which also indicates the signal to exit the trade. However, it is worth noting that 3 additional white triangles are present on the chart, which indicate entry signals that were immediately stopped out. Additionally, several yellow lines are visible on the chart, denoting short trades that failed. This could be attributed to the fact that the market was consolidating, which was previously mentioned in a previous video as a scenario to avoid while trading. Therefore, it is important to exercise caution and thoroughly evaluate market conditions before executing any trades, to minimize potential losses. To determine our decision to initiate a short position in this trade at 10 a.m., we followed a systematic approach consisting of 2 steps. The first step involves setting our levels on the level setting chart. The second step was to assess the bias chart to determine the probable direction of the trade. After the price broke support on the level setting chart, we analyzed the level setting chart, bias chart, and entry point chart to confirm our decision to enter into this trade. As demonstrated in our previous video, the target was successfully achieved in this specific trade. In essence, our decision-making process was not complex, as we relied on the level setting and bias charts to validate our entry point. It is important to note that taking a trade in the direction of the level setting and bias charts is often the most favorable approach. While this may seem obvious, it is surprising how many individuals attempt to succeed by going against the prevailing trend. So what are the steps in determining whether or not you should take a trade? The first step is to carefully analyze the moving average in the level setting chart, looking specifically for long smooth lines where the color is not broken. Traders should be on the lookout for both long red lines and long green lines, as these indicate a high probability of a long smooth trade in the opposite direction. Once such lines have been identified, appropriate price levels should be set. The second step involves confirming the probable direction of the trade using the bias chart. Traders should carefully assess whether the trade is likely to be bullish or bearish, based on the information available. Remember, avoid trading consolidations if possible. Finally, on the entry point chart, traders should look for the yellow moving average to be either above or below the special moving average, depending on whether they are going long or short. Stops should always be set, either using the stops in the AI or according to the trader's own level of comfort. By following these steps, traders can make informed decisions about whether or not to take a particular trade. It's so easy, even a human can do it.